Greetings, Jeffrey Scott here. This is my Market MRI Pro update for the week ending Sunday, 12/29/2024. Title is, Will Santa Come Back This Week? Well, the Santa Claus rally started off okay, and we're still positive during the period of the rally time, but Friday was a little bit tougher day in the markets with a pretty dramatic number of stocks selling off that we'll look at in a few minutes. Again, my name is Jeffrey Scott, and you can reach me at marketmripro@gmail.com. As always, this is for education only. I'm a doctor. I'm not an investment advisor. I have none of the licenses that we require for me to give you investment advice. I do these to teach you how I do top-down analysis, the tools I use, and how I apply them. Trading involves risk. You are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned in this report. In general, trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, but I am an independent trader. I don't trade other people's money, and I don't provide trade investment advice. Many of you already are members of my top-down trader group. If you're not, why not? It's free. It is not to solicit sales, but you will get most nights a video and commentary that I don't provide elsewhere. And you'll front run my Stocks and Docs site, which doesn't come out too early in the morning the following day. And I will be doing a live video for Stocks and Docs and Top Down Trader and all my sites. I'll be doing a January 25th, Saturday, from probably 9 to 12. I should really say until I get tired of talking, because usually I can go on even longer than that. And I'll use it to really provide some education, show you how I use the tools in more depth, answer your questions, and also will be using it as a time to launch the Market MRI Pro app. There will be exclusive discounts made to members of the Top Down Trader group, which cost you nothing. One of the things that I didn't talk about in my larger YouTube video, and again, these are not a replacement for those videos. Those videos have a lot more information. This is just a quicker analysis, but I don't include things like the Leaders Index. And I've said down but not out with a question mark. Is there a big bounce coming at the 50? A break below the 50, and that I'm done with this market. This is a list of leaders that we created over a month ago with the knowledge that the leaders will break down before the markets. Now, reality, they peaked in early December. And it was pretty prophetic of the weakness that we've had of late, but they haven't broken down. They're still above the 50. So down, but not necessarily out. All right, let's go look at the tools. This is my timing model, Market MRI Pro. The weekly is my dominant direction. This is the buy-sell line here. It's a buy on the spiders, buy on the cube, buy on the diamonds. The last 2 weeks have been short the Russell. So mixed bullish. So I would put myself in the moderately bullish, minimally bullish, but not yet bearish on the weeklies. The dailies tell me I have no conviction to the long side. As you can see on the dailies that we have gone to sells across each of these ETFs. That tells me not a good place to be buying a lot of stocks, because the weeklies are still 3 out of 4 long, probably not a great place to be going short. I've raised cash. I've got some contra ETFs by lighting them up on Friday because they turn profitable on Friday. But I'm pretty neutral, and but I'm not short and I'm not out of the market. So that means I'm still a little bit to the long side. If we look at the market briefing, you could see the tool that I use intraday. And we'll start with the performance views. 1 day close, you could see that the big, hold on one sec. The big driver on Friday, the biggest move was in volatility. That's not good for the bulls. You could see the only major market ETF not down 1% was the diamonds, and they were down 0.74. Over here, you can see that for the most part, they finished in the middle of their daily range, so they weren't at the low of the days. If you look at the 5-day change, you could see the markets were actually pretty strong. But this includes the prior Friday, which was a high volume option expiration day. And you could see that all of them were above 1%. Now, if you take out that 5th day, the markets are not nearly as positive. They're positive, but they're positive fractional percent. If we look at the 1-day move in the markets and we look at the individual S&P sectors here, you could see they were all negative. The flat line was energy, next utilities, healthcare, and staples. So the things you'd expect on a weekday in the market, the more defensive plays, but they were down. Discretionary and tech, communications, the recent leaders were down a lot. You could see over 20 days, those are where the strength was. On a 5-day move for the market this week, you could see that for the most part in the S&P 500 sectors, when you include the prior Friday, again, that was an outsized move day, were positive. Over the last 4 days, the 4 days this week, you would have given up a lot of that positivity. Now you could see up here NYSE, NASDAQ, regardless of time frame, more new lows, net new lows than new highs. Okay. And if we look over here on the right, and you could see that sector-wise on the S&P, they all were negative. On the 1500, only 2% of the industries in the S&P 1500, 6% in the NYSE, and 16% in the NASDAQ were up. If you look at advancers, 8% in the S&P 1500, 19% in the NYSE, and 24% in the NASDAQ. So that means the majority of stocks in the U.S. markets were down on Friday. On the buckets view, if I leave the 5-day on just for a second when it starts up, this will pop up in a second, looking at a lot of data. All right, so the 5 days is turned off. You could see we're coalescing here at bucket number 2 in each of the major indices. When the market is strong, you'll see a lot of stocks over here. When the market is weak, they're over here. If we're at a place where we're too strong and we're going to reverse, you'll have a buildup above the Bollinger Bands, which is bucket 11. If we're too weak and we're going to reverse, you'll see a buildup here. Now, when I pop up the 5 days, you can see we've actually improved from where we were a week ago, but we're still kind of bearish looking. Breadth signals, NYSE on the left, NASDAQ on the right. When you look at stocks above their moving averages, above the 200 in red, the 50 in white, and the green in the 17, these numbers are as bad as they've been. It's similar to what we saw over here when we saw a big reversal. So could we reverse from this point? Sure, we could, but I'm not seeing it yet. If you look here, the new high, new lows, advanced decliners, and the up-down volume are all negative. Similar over here on the NASDAQ. If I look at my ratio charts to get a sense of what's working in the market, ignore the one up here. This is Bitcoin versus the spider, which eased a little bit. But what we have here are the S&P 500 sectors compared to the spider in a relative strength ratio chart. And what you could see is what was strong: communications weakened, discretionary weakened, technology holding up remarkably well. Semis actually did well this week. While the defensive play, staples, utilities, and healthcare and real estate didn't do much of a rally, despite the fact that the market seems to gravitate to defensive plays during a tough time. Energy, materials, industrials remain weak as well. If I go into the JAS layout, I can start to look at the markets from a bottoms up or a top down perspective. So this is the JAS list. This is the NYSE plus the NASDAQ with 100,000 shares and a $1 minimum price. I get 3,334 stocks. From a top-down perspective, I go to the top-down tab, and that takes all those 34 stocks and puts them into sectors and industry groups. I like to use this RM2, which is a short-term momentum sorting tool to bring up what's working the best right now. It's not just a one-day tool. It's looking at more than one day. You could see that all the 11 sectors are negative with this rolled up number of stocks, and that we do have a few positive industries. So we have 1, 2, 3, 4, 5, 6, 14 or 15 out of 144. This is a weak market. Now, from a top-down perspective, let's say I was interested in energy. I could hit energy. And what's going to happen, this 33, 34 is going to drop to 204. These are the stocks in my list that are categorized in the energy sector. Then I'm going to look at now my 140 or so industry groups are now 10. And the leaders are exploration, production, refiners, and services. Down here are the stocks in the top 3, which is 110, ranked by short-term momentum. I don't even know what LB is. What is LB? Land Bridge Company. Don't know anything about it. I certainly like it. Run up, pull back, and it just regained the 50. I might want to, down here is, well, just the OBV versus moving average. I want it to be green. It tells me how many days it crossed. Relative strength as well, green, and how many days it crossed. Up here is the bongo, and you can see the weekly bongo still red. The daily bongo just flipped. Now, there's different things that I might do to find out more about Landbridge. I could go into TradingView. I can look at LB, and it pulls it up here. It's not been trading for a long time. I can see that its IPO was in June. I could see it makes money. Here's its revenue. Next earnings are the 26th. Probably not going to trade something that's, well, it's an IPO, which is fine. I'd have to do some research before I would trade it. That's probably a better thing to say. Next one, CLMT. I believe this is an LLP, which means it probably pays a dividend going sideways. I want to know more. Tidewater is services, really beaten up, be bottom fishing. So I might look through these and see if anything looks good. Spoiler alert, there's not a whole lot that look good in there. And the ones that look the most interesting to me are things that are, well, I'll just put the one that I own rather than look for it. It's here somewhere. Is I own ET, Energy Transfer Corp. Of course, now I got to find it in here. One of the things that we're going to clean up is the sort, looking up symbols. If there's 3 letters, it's easy, but with 2, it shows too many. And you could see a big move. It's net. That's not ET. Oh, so I put in NET. ET. See, somebody could have told me that if we were live. All right, try it again. I think what happened was I put the right letters in. I clicked the wrong thing. Oh, it's somewhere in here. And here it is. Big uptrend, pullback, flag, breaking out, pays a 6.8% dividend. So one way to use bottoms up, or excuse me, top down, is to look at the leading sector and then take a look at some of the leading industry groups in that sector, and then go through the top performing stocks in those leading industry groups and the leading sectors. Another way is to say, let's just rank the industry groups. And this should be all, that's just 10. Let's turn off energy. And let's go back to the 144. Bring the best to the top. And I might just look at the top 5. 1, 2, 3. All the speed things are things that will be tuned up before this thing gets launched. And Praveen was in India for a couple of weeks. He's back. So we've been working already, trying to get this thing done. And when I say working, Praveen's been working. I've been reviewing and suggesting. The guy's a brilliant programmer. I am not. So here I just took the 5 leading industry groups and looking at what's doing well in them. I've already looked at a lot of these. Some of them are covered in the earlier video. Lululemon, big gap up on earnings and a pullback, breaking out of the flag off the 17. If the market goes higher, I like Lulu. Abercrombie and Fitch going sideways looks to me like one of these things that if the market does well is prepared to take off. Those were, I think, the big ones that I paid attention to in this group. Another thing you could do, I'm going to turn these off. And you could look as many or as few of the industry groups as you want. Let's see if they all go away if I just go back to Impulse. All right, so I'm back to the 3334. The other thing that I have is the ability to filter at the bottoms up perspective. So I want to finish by looking at those 2-day momentums, one of my favorite scans. So let's drop this down. Let's limit us to volume over 500,000. Drops us from 3334 to 1774. Price over 5. Gets rid of the small stocks that don't trade much. And now let's look at 2-day K-Force, which is momentum up. And I've got 4 stocks here. Let's take a look at them. SUPN, Supernus Pharmaceuticals. I like this one a lot. Strong uptrend. Pull back to the 50, which is free parking and a breakout. Great volume. Look at the 5 dots in the last 2 sessions. You're green on both OBV and relative strength. GDS, I like a lot. Sideways move and a breakout above the 50 with a new EMS. The CPR is already in buy. Have momentum and a breakout from a squeeze. Green on the relative strength and OBV. King's Cloud. It's already had a big run, but if you're looking for momentum, when is this going to stop moving? Yes, it would have been better at $3 or $4. And I talked about it in my earlier presentation. We've had lots of opportunities on this stock. And then the other one I want to bring up is a stock that I looked at in my earlier presentation. If I have, I've got some bad habits, we all do. And one of them is I love earnings. So this thing showed up, all right, hit the wrong one. KD, Kyndryl Holdings. Showed up on a number of my scans. And when I looked at it, I thought, all right, it had a nice move and now it's going sideways. But then I looked at fundamentals. Now, I hope to show you forward-looking fundamentals soon. But looking backwards, not really much of a story here except it turned positive in July. Revenue is kind of flat, so that doesn't really do much for me. Then I looked at, and we're going to look at 2 sources right now. One thing I looked at is market search. Oh, it's over on my other computer. Let me bring it over. And look at what happens. It goes from a big negative and turn positive with massive growth. If it sees these earnings, the stock could double or triple from here. Question is, will it actually see those earnings? Okay. And then the other source might be to open it up in TradingView. TradingView gives us a little bit more information. It gives us surprises, and we had a big surprise in November, and surprises on revenue. But let's see if we can look forward. So I need to see earnings, more financials. Let's look at revenue. What's interesting is their revenue does not look like it's growing much, but their earnings Look at where we were, 2 cents loss, 17 cents positive, 3-cent loss, jumping to 43, 59, 39, 44. There's earnings growth coming in. I love earnings. So this is one that I'm going to be watching as well. And what I said on the longer video, just to review some of my favorite stocks in the market right now, GDS, uptrend, pullback, took out an automated trend line resistance here. GDS. AEHR is a semiconductor that's broken out. Big surprises in earnings. Here's that King's Cloud I showed you. It's already taken off. Maybe that's a bridge too far, but this one looked interesting, certainly from a relative strength perspective. Supernus, pharmaceutical company breaking out of its trend line there. And then the KD, which is the one that's going sideways, but I'm getting excited about the turnaround in earnings. On that note, I'll tell you, have a great New Year's. Not sure how many I'll post this week, but I'll be back after the holiday. Take care. And I'll send out invites for the live meeting soon.